Welcome to Complex Systems, where we look at the technical, organizational, and very human reasons the world runs the way it does. I'm Patrick, better known as patio11, and today I'm reading an essay with some live commentary about the business of check cashing, why it exists, why it's misunderstood, and why it's not the way you probably handle checks. If you're banked, you snap a photo or visit a teller and money appears, but the key truth under the hood is that depositing a check is a small loan from your bank because payments are messages with uncertainty and sometimes the payer can't cover it or the check is bad. Banks extend that credit only to people they expect won't bounce checks and will make them whole if something goes wrong, which is one way people end up unbanked after charge-offs, check systems hits, or repeated overdraft fees born from the era of so-called free checking. When you're not banked, you take the paper into a currency exchange, endorse it, get cash on the spot, and walk out paying a posted fee. It's fast, it's simple, and it's not free. Endorsement is the legal magic that makes this work. You sign the check over to the cashier so the obligation shifts to them, and the much maligned for mobile deposit only line exists to foil double deposits across multiple banks. People hate that these shops skim small amounts from many poor customers, and I hate poverty too. But rather than vilify clerks and customers, it helps to examine the logic. Pricing buckets reflect payer risk and operational risk, not just pure profit. Government checks have minimal credit risk, but real operational clawback risk, while storefronts still pay rent, wages, compliance costs, and per-check bank fees that are often set by analysis, meaning a negotiated bundle with minimum monthly commitments. The biggest unpriced risk is actually the customer. If a check bounces, the cashier usually eats it, so they rely on persistent identities, IDs, photos, local memory, and community ties to keep losses tolerable and to bar repeat offenders. There's a class firewall here too. Check cashers spare banks the customers they don't want to serve. And many customers say they prefer the clerk who treats them without judgment. Even some bank folks will pay for that convenience and human connection. Technology can narrow the gap. App-based cashing like Ingo often costs less and can be instant, even offering a no-fee option if you can wait for a $500 paycheck. The app might charge about $5 versus roughly $12 at a storefront. Embedded products like Cash App widen risk tolerance through partner banks and feel friendlier to users, while direct deposit, EBT, and earned wage access shift costs toward interchange and merchants, which can be more progressive than loading fees onto the most precarious. That's the tour of check cashing. If you want more on alternative finance or how class shapes financial products, drop me a line. And if you have guest ideas, send those too. Thanks for listening, and I'll see you next week on Complex Systems. If you have comments, email me or ping at patio11 on Twitter. Ratings and reviews help a ton for discovery, and let me know what you think.